TSA Group Berhad was founded on 4 November 1993 with the incorporation of TSA Industrial Sdn Berhad. TSA Group is principally involved in the distribution and supply of ferrous and non-ferrous metal and other industrial hardware products, manufacturing and processing of stainless steel, pipe, and other metal products. So, basically, this company is one-stop industrial hardware provider. This group also export products to international market to 16 countries, which is Australia, Bangladesh, Brazil, Brunei, China, France, India, Indonesia, Kazakhstan, Maldives, Myanmar, New Zealand, Saint Lucia, Sri Lanka, Thailand, and the United Kingdom.
Hi, I'm Crystal, and now I will talk about the financial analysis. First of all, this is the short version of the income statement. Next, I will explain about the company's revenue, which has increased both in 2021 and 2022 by 29% and 18% respectively. This is due to the increased demand as the COVID-19 situation improved, rise in quantities traded for stainless steel plates, bars, channels, and angles, higher average selling price for both trading and manufacturing of stainless steel products. However, it decreased in 2023 by 11.3% because of the decrease in average selling price across trading and manufacturing segments. Broader trend of reduced prices, particularly for grade 304 stainless steel, and the absence of purchase from a major customer for certain stainless steel products. After that, the gross profit also increased dramatically in 2021 by 80.2% due to the higher average selling price and increased quantity sold. On the other hand, it decreased slightly in 2022 by 7.7% because of the increased input material costs and higher direct labor costs from minimum wage order 2022. Furthermore, it continued to decrease in 2023 by 34.2% due to the lower average selling price driven by reduced Asian stainless steel prices. Overall, we can see that the margin started to drop in 2022, caused by several factors that affecting the financial performance, which is exposure to fluctuation in the price of stainless steel, no long-term contract with customer, and reliance on imported stainless steels and materials. Next, we'll move on to the balance sheet section. Generally, we can see that the balance sheet dropped in 2022. One of the reasons is from the liability side, which is because of the drop in current tax liabilities. The effective tax rate for 2022 was 18.9%, lower than Malaysia's statutory tax rate of 24%. This happened because of past errors in estimating taxes using previously unrecognized tax benefits and lower than expected tax payment in the previous year. Moreover, the sale of land led to a bit more tax payment in the end. And dividend payable was also removed. This is because the company has fulfilled its obligation to pay the declared dividend to its shareholders.
Hello and Assalamualaikum to Sir and my fellow friends. So I will be presenting about the current ratio for this company. The current ratio has been declined from 2 times in 2020 to 1.7 times during 2021. This was mainly due to an increase in dividends payable by 33 million ringgit, an increase in current bank borrowings by 13.4 million ringgit. This also was partially offset by an increase in cash and bank balance by 23.7 million from net cash generated during the year, an increase in inventories by 15.9 million ringgit arising from the higher purchase quantity and prices for stainless steel products purchased during 2021. The trade receivables also has increased by 8.5 million ringgit, mainly due to recovery in sales from customers in Malaysia in the second half of 2021 following the gradual easing of COVID-19 control measures. Meanwhile, during 2021, the current ratio has increased from 1.7 times to 2.4 times during 2022. The increase in current ratio was mainly due to decrease in dividend payables by 35 million ringgit, decrease in current bank borrowings by 14.7 million ringgit, and decrease in current tax liabilities by 5.7 million ringgit, and increase in other receivables, deposits and prepayments by 4.1 million ringgit, mainly due to advance payments to supplier for the purchase of stainless steel, input materials and earnest deposit for the purchase of the Semenyih land. Besides, an increase in the value of inventories by 3.6 million ringgit, also due to higher average purchase prices of input materials. Next is debt equity ratio of TSA Group Berhad. So during 2021, the debt to equity ratio was slightly higher at 0.6 times. This was mainly attributed to increases in onshore foreign currency loan as well as structured and trade commodity financing of 4.9 million ringgit and 8.7 million ringgit respectively, which were used as working capital to purchase input materials. Besides, the debt to equity ratio decreased by 0.4 times in 2022, which mainly attributed to decrease in 25.4 million ringgit in the outstanding balance of our onshore foreign currency loan, which was used as working capital to purchase input materials. In addition, the total equity increased by 25.2 million ringgit from total comprehensive income by 40.6 million net of dividends distributed of 15.4 million during 2022. The ratio also increased by 0.7 times during 2023, which was mainly attributed to increase of 22.3 million ringgit and 12.6 million ringgit in the outstanding balance of our onshore foreign currency loan and structured and also trade commodity financing that were used as working capital to purchase input materials. Meanwhile, the total equity decreased by 8.7 million from dividend distributed of 20 million ringgit net of total comprehensive income during 2023.
For the SWOT analysis, the strength of the company is the company had a stable current ratio. This shows that the company managed to pay their short-term obligation within 1 year. The higher the current ratio of the company, the more capable the company to pay off their debts. Next, the company also received a certificate from CIDB, which is the Construction Industry Development Berhad, in 2021. The CIDB certificate shows the capability of a construction industry in Malaysia. By having this certificate, it will help the company to assist in the export of their product to the other country. For the weakness of the company only focus on one main product, which is the stainless steels and metal product. This will lead to potential revenue limitation with a limited range of product to sell. The revenue outcome will also be limited. Also, the gross profit margin of the company is decreasing for the past 2 years. It shows that the company cannot convert their revenue into profit efficiently. For the opportunity, by lowering the cost of the new products, it can attract many users and they might need to merge the trend of starting small and scaling up after that. Also, by applying the rapid advancement in technologies, it can help in the amount of product produced within a day. And lastly, for the threat, fluctuation of the exchange rate, inflation and tax can give an impact to the company. Since the SA Berhad also exporting their products to international markets, a slightly change in the currency might affect their company. Next, the competitiveness between companies. There are many companies that are also producing the same product like SA Berhad. Those companies might need to have their own ways to attract users to choose their product.
Sustainable revenue portfolio. Capital expenditure for the establishment of Semenye manufacturing premise. The company has earmarked Rm5.1 million of the gross proceeds from the public issue for the construction of the Semenye manufacturing premise. The gross proceeds of Rm5.1 million is intended to finance approximately 10% of the construction cost of the Semenye manufacturing premise. As at the LPD, the company has obtained an additional banking facility of Rm126.9 million from Hong Leo Bank Berhad, where Rm45.9 million is earmarked for the construction of the Semenye manufacturing premise, Rm46 million. For the parcel of the reconditioned stainless steel coil rolling line and the balance of Rm35 million a trade facility for our working capital to parcel input material. Next, working capital. The company has earmarked Rm12.33 million of the gross proceeds from the public issue for its working capital requirement. The proceed allocation of the proceed set out below. And last, repayment of bank borrowing. The company has earmarked Rm20 million of the gross proceed from the public issue to partly repay the bank borrowings. The expected annually interest saving rate from approximately Rm1.1 million to Rm1.3 million based on the prevailing interest rate ranging between 4.51% per annum and 7.39% per annum from the banking facilities from the above financial instruction. However, the actual interest saving may vary depending on the 10 applicable interest rate.
Hello, my name is Mohammed NIZAM. My metric number is BB211100027. So now I'm going to talk about future initiative for company improvements. So number one is product diversifications, which is expanding into adjacent markets, explore related metals or product categories alongside stainless steel, like aluminium or galvanized steel, catering to industries such as construction, automotive, or appliances. Next is developing value-added products, invest in processing and fabrication capabilities to offer finished product like pipes, tubes, or building components, increasing profit margins and appealing to new customer segments. Second is boosting profitability, which is cost optimizations, implement lean manufacturing practice, renegotiate material contracts, and optimize logistics to reduce operational costs and improve efficiency. Next is direct to consumer sales, explore online or retail channels to intermediaries and sell directly to end users, capturing a larger share of the margin profit. And the last one is embracing innovations, investing in R&D, develop new processing technique, alloy compositions or application for existing product to stay ahead of the curve and create unique value propositions. And the last one is adopting smart manufacturing, implement automations, data analytics, and AI in production process to enhance efficiency, minimize waste, and optimize resource utilizations. That's all from me. Thank you. Now I'm going to pass to the next presenter.
In summary, the SA Group Berhad presents as a growing company in the metal and hardware industry with ambitions for further expansion. In fact, the ratios provide insights into the company efficiency in managing receivables, payables, inventory, liquidity, and capital structure. The current ratio shows that it has been fluctuated, increasing in 2022 and decreasing during 2023. When assessing the company's short-term financial health, it should continue to monitor its liquidity position and consider industry standards. However, the trends observed over the year may prompt further analysis and strategic considerations. A more in-depth examination of the company's financial strategy, industry benchmark, and overall risk tolerance would provide a more complete picture of its financial position. That's all from me and our group. Thank you.